Ever pondered over how the economic health of one nation could impact the globe? Well, let's dive into the current scenario of China's economic slump. China, a global economic powerhouse, is experiencing a slowdown that is sending ripples across the world. With its economy expected to drive a third of global economic growth, the decline is causing concern far and wide. This economic deceleration is not just a local concern, but a global one, affecting nations across the board, from Asia to Africa. Interestingly, the most significant impact is being felt by countries in Asia and Africa. These nations have seen a marked decline in imports from China. This reduction indicates a decrease in the demand for goods and commodities, a clear sign of an economic slowdown. The value of shipments from these regions to China has dropped compared to previous years, signaling a potential problem for these economies. Furthermore, the slowdown in China is not just about numbers and trade balances, it's about real-world implications. The decline in imports means fewer sales for businesses in these regions, which could lead to job losses and economic uncertainty. It's a domino effect that starts in China, but doesn't end there. Despite the slowdown, the volume of commodities being shipped to China has managed to hold up. However, if the economic deceleration persists, it could affect these shipments and, in turn, impact miners worldwide. This scenario could lead to a decrease in employment and economic growth in countries heavily reliant on mining exports. On the flip side, falling producer prices in China due to the economic slowdown have led to a drop in the prices of goods being shipped globally. While this could be beneficial for countries battling high inflation, a prolonged slowdown in China could have far-reaching negative effects on the global economy. Clearly, the economic vitality of China holds a significant influence on the global stage. As we continue to monitor the situation, it's evident that the ripples of China's economic slump are being felt across the globe, touching businesses, livelihoods, and economies in its wake. Now, imagine a domino effect, with the tumbling piece being China's economy. Let's examine the ripple effects. This economic slowdown in China is making waves, impacting the global shipment of commodities and affecting miners worldwide. As demand in China falters, the dominoes begin to fall, and the reverberations are felt across the globe. For the past 10 months, China's producer prices have been contracting, leading to falling prices of goods being shipped globally. This is like a double-edged sword. On one side, this drop in prices is a silver lining for countries grappling with high inflation. It's like a temporary breath of fresh air, easing the pressure on their economies. But let's not get too comfortable. On the flip side, a prolonged slowdown in China could spell trouble. As the world's second-largest economy takes a hit, the ripple effects could lead to a global economic downturn. It's like when one domino falls, it triggers a chain reaction, causing the rest to topple. While it's true that lower prices can provide a brief respite for countries battling inflation, the prolonged economic slowdown in China could lead to more significant problems. Remember, when one economy sneezes, the others can catch a cold. And right now, China is not just sneezing. It's going through an economic flu. As we watch these dominoes fall, we have to remember the interconnectedness of our global economy. We're all part of this intricate web, and what happens in one corner of the world can impact us all. So as China's economy continues to slow down, the ripple effects will be felt worldwide, affecting everything from the price of your morning coffee to the cost of your next vacation. An economic ripple effect is in motion, and the world is feeling the tremors. The economic dance between nations extends to the currency market and interest rates. Let's explore how China's economic woes are choreographing a global dance. When a country as large as China experiences economic turbulence, its ripples echo across the world. One of the places where these ripples are felt the most is the currency market. As China's economic slowdown persists, it's leading to a depreciation of its currency, the yuan. This depreciation doesn't just affect China, it has a domino effect on other currencies in Asia, Latin America, and Eastern Europe. For instance, currencies like the Singapore dollar, Thai baht, and Mexican peso are all feeling the weight of China's weak sentiment. Currency fluctuations are more than just numbers on a screen. They have real-world implications. They can affect everything from the cost of your vacation abroad to the price of goods in your local store. So, when China's yuan depreciates, it has the potential to impact the global economy in significant ways. But the story doesn't end there. China's economic woes are also influencing global interest rates. You see, to stimulate its economy, China has been slashing its interest rates. While this might be a good move for China, it has reduced the appeal of its bonds to foreign investors. Why would investors park their money in low-interest bonds when they can seek alternatives in other regions with higher returns? This shift in investment patterns can lead to capital flight from China, which in turn can further weaken its economy. It's a complex dance of cause and effect, where a step in one direction can lead to a flurry of movements in another. In the grand scheme of things, we're all linked by this intricate dance of economies. A misstep by one can lead to a change in rhythm for all. It's a reminder that in our interconnected world, no economy is an island. The global currency market and interest rates are dancing to the tune of China's economic slowdown. Now, let's turn our attention to the global investors in various sectors that are feeling the heat of China's economic slump. Imagine you're a global investor with numerous stakes in the Chinese market. You've been observing the country's economic downturn and you're starting to feel the pinch. Companies with significant exposure to China, such as Nike and Caterpillar, are already reporting hits to their earnings. The economic slowdown in China is no longer an isolated issue. It's a global predicament that's causing ripple effects in markets across the world. Global investors have begun to react. They're pulling out billions of dollars from China's stock markets. It's like a game of dominoes. As one piece falls, the rest follow. This mass exodus of investment isn't happening without reason. Industry giants like Goldman Sachs and Morgan Stanley have slashed their targets for Chinese equities, adding to the growing uncertainty surrounding China's economic future. But it's not just the big players who are feeling the impact. Let's talk about the luxury goods firms. China is a significant market for these companies. With the economic slump and reduced consumer spending, the demand for luxury goods is taking a beating. And it's not just them. The travel and leisure sector is also particularly sensitive to fluctuations in Chinese demand. With fewer people traveling and spending, the ripple effects of China's economic downturn are being felt far and wide. As we can see, the impact of China's economic slump is far-reaching. It's not confined within its borders. It's a global concern that affects various sectors and investors across the world. The world watches with bated breath as China navigates its economic challenges. The ripple effect of its economic slump serves as a stark reminder of our interconnected global economy. China's economic slump isn't just a national crisis, it's a global concern with far-reaching implications. The world watches with bated breath as China navigates its economic challenges. Before we continue, we'd like to take a moment to remind you of the value that we bring to your screens. We're on a mission to provide you with insightful content that keeps you informed about the global economic landscape. If you found value in this video and would like to stay updated on China's economic situation and its ripple effects, we invite you to hit the like button. It helps us to reach more people who, like you, are keen to understand the world economy. Don't forget to subscribe to our channel and hit the notification bell to ensure you don't miss any future updates. We've got more insightful content lined up for you. Let's continue on our journey to understand the global impact of China's economic slump. Stay tuned.